Okay, and we're live. So welcome everyone to the first crypto hour session of 2026. So happy new year everyone, and happy new crypto year. So the new year is started in the right way, and we look at things that we need to consider for the year ahead. So for general investing and for crypto in particular. So let me start sharing my screen straight away, and we look at a couple of things. First of all, let's have a look at general what Bitcoin has been doing. So the last time we met was right here, I think on Friday. Where's that? Friday the 19th, I think it was. Okay, so we were down here between 85 and 87. Now what you notice, the price then at the end of the year didn't really do anything, and then it started climbing up, starting of 2021, literally from the 1st of January. Getting to almost touched the 98,000. So from 87 to 98, so over a 10% gain in the first couple of weeks of 2026, and it's from a technical perspective, we are now starting to establish the first segments of an uptrend. Now, before we get to interrupting the downtrend that was created ever since we had a new high in October, which is this one, I'll draw it for you. Okay, so this is the downtrend. That it's at the moment is still leading. So is the just have to adjust this slightly, which is still at the moment dominating the Bitcoin chart. Where it will be invalidated, it will be stopped, will be if price moves and closes above this point. So we're still quite far away. That's 107,000. We are now at 90, 95, 96. So there's still quite a way to go. So at the moment, as you can see as well by the speed of movement, the down moves are being very strong, and the up moves are being very gentle. Okay, so at the moment, if we just were looking at the chart, we'd be looking to sell rather than for a point to buy. So look at this with caution so far, but there are lots of positive things to look at. In terms of again looking at Bitcoin, we're looking at the realized price, which is the average price that all the old Bitcoin, the last time they were moved, the price that they moved at, we're now above 56,000. Okay, so that can be seen almost like the floor that we can reach during the next bear market. So that obviously any exchange that is done at the moment will be done at the moment we're at 95,000, 96,000. Okay, so any Bitcoin that is moved will increase the average, because obviously the average is 56. Exchanges are happening at over 90. So this average price will keep going up. We're nowhere near next to the bear market, but by the time we get there, this average will probably have climbed up to 60 and above. So if you see what happened in 2025, it was in January, was at 40,000. Okay, and by the end of 2025, it was like 56. So very shortly we should climb above 60, and so that can start to give you an idea. Okay, if I want to protect myself, what are my expectations? If Bitcoin has to drop, where would it drop where would it stop dropping? And it's interesting to see as well that 56,000 is above the price at which the Bitcoin ETFs launched, okay, which was in the mid 40s, mid to high 40s, okay. So it's already the bottom of the bear market would be probably above that figure. Nothing is guaranteed, but it's a good expectation to have. Now, understanding what may or may not happen in the following weeks and months. So we won't be looking too much at a news event at the moment. We'll be looking more like a 10 mile aerial look at the situation. So this is to understand. This is what is called, you might have heard of it, the Cantillon effect, which was from about 3 centuries ago. But what happens when the new money gets created? Who gets it? Who gets it first, or gets it afterwards? So to understand how things move, okay. Level 1, so money that gets created, who has got first access to new money? Is banks and financial institutions. What do they do with it? They buy assets. Asset prices go up. Secondly, large corporation and government contractors get second access to it. So again, they invest and expand. So the result of this, the asset prices go up. Third level, all this action, level 1 and level 2, results in asset prices. Asset prices go up. Houses, stocks and shares, investments, they only tend to go up first. So wealth moves up first. Then step 4, consumer prices start rising because there is more money to buy the same commodities. So obviously commodity prices will move up, because it's a simple equation. If there's only 2 people that have $1 and want to buy 1 apple, the maximum price that the market could set for that apple is $2, okay, because there's only $2 available. But if there are 10 people that want to buy the same apple and everybody has a dollar, the maximum price could be up to $10. So you can see, as the level of money in circulation increases, prices generally tend to increase, unless the production is going to a crazy level and we're producing more goods than the money to buy them. And the last step is the wages start rising. So that's step 5, and it's the last one. Okay, and normally the wages start after the prices have already risen. Okay, so yes, wages go up, but with the increased wages you can buy less things, and this is the process of what they say the Cantillon effect. So and it's basically summed up in saying that the rich become richer and the poor become poorer, not because on any particular design for the rich to get richer, but simply because the rich own the assets and the poor don't. Okay, so I'll show you what different things that prove the same thing. So we had a period after the Second World War, a period of great prosperity from 1947 to 1979. So during these cases, productivity rose, which is the top line, during this period by 119%. But also, the benefit of productivity went, in large part to the workers, whose wages actually doubled during the same period. Okay, and so the average number of goods produced by each worker grew by a lot, but also the wages the worker received, so they benefited by the increased productivity. Now, in 1971, as you know, the gold standard was terminated. So then the US dollar wasn't convertible to gold at a fixed rate as it was in the period before. So what happened from 1980 till now? productivity has kept going up, okay, by over 80% from 1979 to 2009. Okay, the workers' compensation though didn't. It went up only by 8% in real terms. Okay, and the same for average hourly wage, only went up by 7%. So you can see, so who benefit from the productivity? Is my question. So it's mainly the owners of the assets. So this is why, you know, stock prices have gone up, house prices have gone up, everything else has gone up by a lot, but wages haven't actually kept pace with it. So whether with a wage, with an average wage, you could comfortably, you know, buy a house and have the kind of American dream. You had a house, a car, and kind of a decent standard of living. Now, with the same, you know, the middle Americans is struggling to put food on the table, and it's a big problem. It's a big problem right now. So this is to make you understand what happened to the US federal debt during the same period. Okay, so if we went from 1945 to 1971, the debt still increased, but increased from 50 billions to 260 billion. Okay, but look at it, what happened. So it was like an increase, you know, a relative increase of 54% in 26 years. But in the following period, since the 1971 to the current day, to January 2026, we went from 0.4 of a trillion to 38.4 trillion, a difference of 9,500% in 55 years. Okay, so what's the difference between the period before and the period after? Okay, the difference is that after 1971, we are in the era of fiat money. Fiat means in Latin, let it be. Money is created from the air. It doesn't exist before it comes into existence. Where here is backed by gold. You have to have gold first. If you want to spend money as a government, you have to collect taxes first. Okay, here you can just, you want money to spend, you just print it, you just create it, and this is the kind of like the equation that needs to be understood, because what's happening now, this is not slowing down, it's accelerating. So if you understand how to navigate these times, then you understand what you need to do. Again, moving on. So this is actual money supply. How much money is in circulation? So from 0.7 trillion in 1971 to November last year, 22.3 trillion. An average growth compounding rate of 6.6% per year. Okay, so the question is, do your savings or investments grow by 6.6% or above? Because if they don't, you're actually losing purchasing power. So if you got money in a bank that pays you, I'm talking about the US here, but it will be similar figures for other parts of the world. So if you've got money in a bank, for example, that pays you 5% per year, you think you're doing great. Actually, what's happening is that you are losing 1.6% of purchasing power every year. After 10 years, you can buy a lot less with the increased money that you are getting, because you feel that, oh fine, I've got a lot more money than I had last year, but tell you what, you can buy less things with it. So this is the erosion that happens to $100,000 over time. Okay, where you save at 4%, but the money supply grows at 6.6% a year. That means that there is a 2.6% annual gap. After 10 years, your account shows 148,000. You had 100,000. Now you got 148. Purchasing power will be equivalent to 78,000. You lost 22%. After 40 years, you feel, wow, I'm rich. I've got $500,000. I got 480,000. I had 100,000 40 years ago. Well, your purchasing power has lost 63%. Okay, so this is understanding this illusion. And by the way, I haven't even got taxes into the equation, because when you actually earn money in interest from your bank account, what happens? You have to pay taxes on it. Okay, so you can see kind of like how the whole system is designed to take money out of your pockets. And so who benefits out of that? Because if there is more money in circulation and there are the same things to buy, everything becomes more expensive. This is why after 40 years, 480,000 don't buy as much as 180,000 bought 40 years ago. Okay, so you looking on paper, you know, you are a lot richer. In practice, on your paper gains, you have to pay taxes, and what's left buys a lot more. So every year you're losing money, you're losing purchasing power, you're losing real money, so to speak. Okay, so it's the purchasing power of the money goes down. So again, who benefits? The person who benefits is the person that has their wealth invested in things that go up with inflation. So if you own a house, on average, house prices will go up with the money that's available, because there are only a certain number of finite houses that we can buy. The money to buy these houses go up every year, so the price eventually will go down, will go up with the money supply to reflect that, because you know you still got the same things to buy, but more money to buy them with, so price will follow. Now, where am I next? So this is the last one of these things, but there are a few more things that are indicators of what is coming in 2026. Now, we have shown you how much money is being printed from 1970 to 1971 to today. What's happening in 2026, and this is like a research by Goldman Sachs, so it's not, this is not my numbers, okay? What is happening? So these are all the initiatives that have been taken by the Donald Trump, by the legislation. So they are doing some like fiscal stimulus in 2026. My estimations are that the fiscal stimulus will be about 400 billion in 2026, equivalent to about 1.3% of GDP for the US. And these are the kind of things that they will be stimulating. Okay, and when is this stimulus coming? The majority will be between Q1 and Q3. So Q1, why is that? What's happening at the end of Q3? Can anybody tell me? Any guess? So Q3, this is up to March, June, July, August, September, October, last quarter, October, November, and December. There's something that's happening in November here, which are the midterm elections. Okay, so the US where elects not the president, but elects like members of parliament and the Senate. So obviously the ruling party, the Republican Party wants to make sure that people have got something good to talk about before the election, because if people are suffering in their pockets, they're not going to re-elect the ruling government. So that's a truth. Unfortunately, I can show you here. This is a prediction market, poly market, and it shows the Trump's net approval rating in like a few days ago. And you can see his approval rating is negative pretty much in any category. Even immigration, you know, is minus 10% compared to when he was elected. In trade, minus 19%. In the economy, minus 20%. Inflation, minus 30%. So it's not having a good time in the ratings. This would probably, if the ratings are still along these figures at the election, would be a disaster for the Republicans. Okay, so what are they trying to do now? They are trying to give people something good to think about, you know. So moving back. So what's happening now with all the initiatives they have been taking, we're moving into kind of like a Goldilocks event where the inflation is still under relative control. There's good retail spending, and it's the growth would be strong, but not too strong to overheat the economy, and there is good consumer spending. So here you can see the spread between the nominal consumer spending and the 2-year Treasury yield, which at the moment you can see it's like a negative spread, which is probably likely to move even further. That means that there will be like easing condition from the point of the monetary authorities. And we can go, you can see here, I've highlighted a couple of periods that are similar to what we're going through right now. So the things that are more comparable with are the areas between just before the two financial crises of 2000 and then 2008. Okay, so if you want to see what happens in similar periods in the past, this is the numbers from 2003. This is the number from 1998. Okay, so it's the one thing that it's obvious. First of all, is that pretty much a lot of stuff did really well. In 2003, the Nasdaq did almost like 28%, S&P 500 18%. 1998. It was a technology boom at the time, so it kind of like, don't expect to see the same number, but the Nasdaq did actually 85% in the year. But we still had a very solid results for S&P 500 of 26.5%. But the one thing that is common to both periods is that European equities did very well in this, and as you can see, even better than the US equities. A lot of the developed market and emerging markets did better during this period than the developed markets. So it's interesting to see as overall threads that we can take, things that were in common to these periods that could be applicable even now, where going forward there is more expectation of growth in markets outside of the US than there are in the in the US. And the other thing is that we can see all these economies, Japan, Germany, Australia, Canada, Sweden, Poland, Korea, they will be stimulating their economies with very sizable fiscal stimulus, similar to what we were discussing with in the US. So like kind of half of the G20 going big on fiscal stimulus all at the same time. Okay, now in the case of Japan or Germany, this would be huge. Talking about in the region of 1.5% to 2%. And so even many emerging markets, especially the ones that are commodities heavy, exporting commodities, will see large improvements in their terms of trade. So, and to see anything anywhere similar to this, we have to go back to before to pre the great financial crisis, or even like 2017, to find a similar push in the same direction. So these are the things that to expect going into the first half of 2026. Okay, so US inflation should be still remain contained. Okay, growth should gradually pick up. So on the kind of a sizable one big beautiful bill. Okay, so they call it the new fiscal impulse. The labor market should slowly show signs of improvement. Now, real wages and job creation are likely to support the consumer spending, already now at levels of about 5% or above. The Fed will keep the 2-year Treasury nominal yields around 3.5%, so kind of lower than they are right now. So yields of 200 basis points or 2% below the nominal consumer spending is very supportive for the markets. So So markets will react very well to this. So the last times, as you can see, as you already looked, that we have this kind of nominal growth of 5% and nominal rates at 3%. It was last seen in 1998 and 2003. So global economies will be delivering a huge simultaneous fiscal impulse in 2006. So the best returns, kind of from the point of view of stocks and shares, will be kind of like a basket of stocks with a strong international presence in it, should deliver very, very strong very strong returns. Now, from the point of view of where this kind of like the idea where that could come from, at the moment you can see where unemployment rate has gone down, even at a time where the non-farm payrolls have actually been negative. This is negative after revision that comes, there always comes several months later than the numbers are released. So that says that even to get the unemployment rate down, levels of non-farm payroll close to zero should be enough to get the unemployment rate down. The only problem is that at the moment the economy is very weak, so there are not many jobs being created apart from the education and health services and a little bit of leisure and hospitality sector. Anything else is actually reducing work. So, but it's not, the actual type, even after the benchmark will be revised, probably we're going to have numbers close to the yellow, but it's still not in anything to create widespread panic in the US, but it's something that could create problems further down the line towards the end of the year, beginning of next year. And this is kind of like the other, the real issue sometimes. Okay, so the share of unemployed Americans have been unemployed for 72 weeks or above is now 26%. So it's keep climbing. The long-term unemployed numbers are climbing as percentage of the total, and also the number of workers that are for economic reasons are forced to work part-time rather than full-time is growing as a percentage of the total. So these are not good numbers to look at. But from the point of view of the overall economy and what we can expect, we are here on kind of like pretty much in the Goldilocks scenario what we were discussing before. So we had like accelerating growth during a period of net financial easing. Okay, so basically money creation is going up. So this is the monetary policy on this side. The monetary policy easing, as it's been tightening for the last 3.5 years, and at the same time growth is accelerating. So this is the quadrant that we call like everything rally. Okay, so pretty much like almost like everything will go up. So but in particular, the things that are expected to do better during this period: US small cap shares, commodities, Bitcoin, emerging market equities and bonds, developed market equities ex the US as well, and also credit environment should do very well, because when the economy is picking up, and then the credit picks up as well. We are in a situation. Basically, what I'm telling you is that when I say, have I got enough assets? Am I long enough assets? The answer is no, because if you are in cash, your cash will lose value. You lose purchasing power. So obviously, this is not financial advice. I'm not telling you to invest in anything in particular, but I'm telling you that your wealth should be in assets rather than cash, because the amount of money that's being printed will have the 100% sure effect is that the value in money. So the money of next year will be worth less than the money of this year. So you want to have something that keeps value over time instead of losing value over time. So this is, and those kind of things are assets. You know, a house is a house. It gives you the right to live in it and to enjoy it. And whatever money is available to pay for that house, you know, it's the number of houses is limited, but the amount of money to pay for them is growing. So this is why prices are going up, and that's why, you know, everybody invests in property as a first thing probably when you start investing, because that it's, you know, logical, understandable that there is like a resource that everybody wants, and as the, you know, the money in circulation is improving, so is the demand for the same share of cash to buy the same thing. So one thing grows, the other thing doesn't. The thing that doesn't goes up in price. Easy, in relative terms. Okay, so let's have a look at the other things that we look at first of all, and then we go in question and answers. NUPL, net unrealized profit and loss. So this is, again, even with prices that are gone up, it's still looking very healthy. So we still below 50%. So remember that the kind of danger point is 70% or above. 75% and above is what is being called euphoria, which in the past has determined periods where like the top of the bull market, when prices then have started declining. We haven't got anywhere near that point during this cycle, so there will be an expectation of you know, like a rally to up and to get us in the high 60 before price decides to turn back again. So what does that mean? Well, my expectations for the year probably something between 150 and 200,000 for Bitcoin. For smaller coins remains to be seen. 2025 was a horrible year for all coins, but the interesting thing to see is, like, if you think about all the things that we discussed in the first half an hour, as things start happening and the sentiment starts growing because everything's showing good results, then the sentiment towards the riskier part of the investment spectrum, which is represented at the moment by crypto in particular, and all coins more than Bitcoin on Ethereum, very much depend on a positive attitude towards crypto. So the expectations are still that Bitcoin will do very well during this period, but smaller coins I expect to do better than Bitcoin. So we're looking pretty much at doubling of the price of Bitcoin so far, or a little bit below. Then maybe all coins will be, you know, trebling or more during the same time. This is my expectation, say, for the first, let's say, 3 quarters of the year, and then I expect everything to correct quite heavily during quarter 4 or beginning of 2027. So be ready for that as well, to reposition your investments. In terms of, we've seen as well the ETFs are starting showing again some positive numbers again. You know, I see from the couple of good sessions right at the beginning of the year, then like a week of consolidations really, and this week again, boom 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 boom. Okay, so we got like about 2 billions that are coming back into the Bitcoin ETFs during the past week. We are now kind of like a 58 billion since the start of the ETFs. And I remember, guys, that this is the BlackRock Bitcoin ETF, the most successful ETF bar none ever since the first ETF was launched. Okay, and but not by a little bit, by mile. Like, almost if somebody is running the 100 meters and the person behind is running a marathon. This is the difference in results. So something that's never been seen before. The gold ETF is nowhere to be seen in comparison. The S&P 500, the Nasdaq has ETFs are none, not even close to the success of this ETF. So it's something, the appetite for crypto, for Bitcoin in particular in this case, because it was the first that was launched, it's huge. And where a lot of the growth will come from this year is institutional buying. So there's going to be a lot of institutional buying after the books have been reset at the end of the year. We start again from scratch. 2026 now starting from zero from the point of view of investment results. So now as where they're going to set their flags. Okay, and now they got the structures in place to make a lot of money for crypto. You know, they don't need to be a technical wizard. You know, Morgan Stanley and the likes can just get their percentage, their fees for selling these products to people. They don't have to sell anything difficult. They sell ETFs quoted on the stock market. As simple as that, and they can make loads of it. Okay, so I think this is pretty much what I want to. Oh yeah, the last thing I wanted to share. There is still a big thing hanging over our heads in the and that thing is MicroStrategy. So let me bring up the chart. So let's just move this out of the way. So this is the MicroStrategy price chart. As you can see, what the big worry has been and what was hanging over the possibility of the MicroStrategy price, let me see if you got one, was that there was an action to kick basically MicroStrategy out of some of the index funds like the MSCI index fund and similar. So they are part of the Russell, part of the Nasdaq and so on. Because basically the question was that they're saying that companies like MicroStrategy, like the ones that got like a Bitcoin treasury, are not really companies, but they're funds. The funds are not part of these indices. Now, what these indices are creating is automatic buying for the companies that are part in the index. Okay, so if somebody's part of the S&P 500, then all the pension funds that buy the index will buy a proportion of that company. Okay, and the same is true for MicroStrategy. So there was a decision that was due on the 15th of January, like today, but that decision has been postponed until February. So as you can see, the effect of that was announced on the 6th of January. So as you can see, the effect of that has been, MicroStrategy has gone up about 10% as a result, because there's been kind of like pressure that has been released. But if it gets taken out from these funds, then there will be some selling pressure on MicroStrategy shares, and because they are the biggest corporate owner of Bitcoin, obviously there will be some worry as well on the price of crypto. So there is still that hanging in the balance, but it's a kind of like it was a good reaction that decision was delayed, because there has been a lot of public outcry against this move, which basically was like a rotten move by JP Morgan to pretty much destroy the market for MicroStrategy and take it over from them, because they're just planning to do exactly the same thing, but they want to sell you their version rather than, they don't want somebody else to become rich with it. Okay, so yeah, that was the last thing I wanted to share with you at the moment. So let me stop my screen and let's see if there are anybody wants to contribute or any questions. Some shock and awe. Guys, don't talk all at once. Morning, Aaron. Hi, Jonathan.
Morning. Shock and awe, Luke. That's the thing. You see, we're overwhelmed.
A bit overwhelmed. Yeah, I know there was a lot. It's been about a month since the last session, so pretty much I accumulate these bits of wisdom, to share with you.
What's your gut feeling? And is there a little bit breakout on Bitcoin at the moment, or you think it's going to drop to 85? I might have missed the very beginning of your.
It's I mean, I personally I expect to have a go at the 107 level. Whether then it's going to bounce out or bounce down or not. But I expect that this move at the moment, there's not much in the way between where it is now and about 100, 102. So at the very least, it should get to that point. What happens then, remains to be seen. So, but as you can see now, the stimulus is really starting to come true now. If you follow the news, if you heard about the initiative that have been announced by Donald Trump last week, are very positive for the American consumer. So these things are starting to filter through, and then that's kind of good mood takes over, and then everybody gets greedy. That's the way things work. So yeah, I'm expecting to at the very least go above 100,000. Then you know, but I mean, as I said before, during this cycle, I expect to break 150. And this is not, by the way, all the major banks are posting similar numbers. So it was saying the neutral case by JP Morgan was like 148. If things go meh, nothing. So it should get to about 150. If things go well, then we're talking about 170, 180, around more around those figures. And obviously, when Bitcoin goes up, it takes everything up with him. There was a question, Jonathan, I don't know if you want to take that. So the question about Midnight by Pierre. So news feedback on Midnight is quite positive. What do you say to that?
Yeah, I mean it's been the only crypto that's really done well over Christmas period, I think. Pretty positive start. People talking crazy numbers, of course, which you always do. What we'll actually see out of it will be down to how much adoption I think it starts to get, because it's really proved popular, and it has a whole lot of utility that we haven't seen before from a cryptocurrency. So if we get the adoption and the popularity proves out to actually utility, then we should see a really strong token. The hope is still that Midnight will be the impetus for bringing Bitcoin DeFi to a reality, where we can actually start using our stores of Bitcoin to participate in decentralized finance, exchanges, DEXs, yield opportunities, without having to necessarily sell our holdings. So that's the dream story for Midnight, which I think will be, it's kind of inevitable now. It's of all the privacy coins out there.
Oh, you're frozen. Is it me or is it the same for everybody?
No, it's Jonathan.
I don't know what happened because okay. No, there's
As soon as you started talking about privacy,
yeah, exactly. So they shut him down. Shut it down.
There we go. Back again.
Oh, yeah, you're back. You're back.
it was edited out.
Jonathan, a question I had for you, and specifically, what this can mean as a developer. I think so. The difference it makes for me, more than looking at price, because price will do whatever price does. But from the point of view of the developer, once it's all the 8 blockchains are fully integrated, what could be the difference for a developer that's developing like a crypto app now, or being able to develop at the same time for 8 different blockchains instead of just one?
Yeah, well, that's kind of everything you build within software really has a limited window of exposure. And if you're a Mac user and you build a bit of Mac software, then you're limited by the exposure to the Mac market. With Windows market, and then the web came along, and suddenly if you're building a website, then there's definitely Mac software for it. It's definitely Windows software, and it becomes a central point. With Midnight, you're now building with blockchain cryptography, you're building a financial layer for the internet, so anybody can transact with anybody on the internet globally without having to participate in the fiat finance system based on countries and geographical laws. And now with Midnight, you're adding in an aggregation layer between all the blockchains that are out there. So we've had a very disparate set of purchasing rails for crypto so far. Now you build once for Midnight, and you have access to markets that are operating in these currently siloed niches of Avalanche or Brave ecosystem or Ethereum. They're very, very isolated still. Ethereum's done really well in terms of bringing utility, but now actually we've got a whole load of powerful features built into these other blockchains that Ethereum's not so specialist at, and we can start to leverage those specialist areas just by participating in one ecosystem, which is the Midnight ecosystem and the Cardano.
Could we be looking at the way I like to see it maybe is like, are we looking at the Wi-Fi moment for crypto?
Exactly. That's what this talks about a lot. We want to build once and it just works everywhere you go. So you build one phone these days that's compatible with Wi-Fi. You can turn up in Tokyo and still have Wi-Fi connection. That's what we want for our purchasing power, our wallets. We want to turn up in a supermarket in Syria and be able to purchase things with Bitcoin, and the interoperability layer between Bitcoin and the shopkeeper and his bank account or his Ethereum wallet is Midnight, is that Midnight layer. And that's, not even looking at the core features of Midnight, which is to provide privacy for your purchases, for your transactions. So at the moment with all the operations you're doing as a company, anybody can read that financial history. And I don't know if you've ever employed anyone, but if your employees know what each other is paid, they come back asking for more money, and there's always competition that arises out of transparency. And company to company, it's just as important to keep that your transaction history a bit private. It doesn't mean you're hiding anything. It just means that for you to stay competitive, you need to have all your numbers lined up. You've got to have your costs and your prices all matched out, or how much you're paying for people are really important in terms of how effective you can be, how long your money will last in development mode versus how long you'll then run in making money mode. So if you can't do that in crypto because everything is transparent, then business is stifled. Real utility, real adoption is stifled. With Midnight now, you've got that interoperability. You've also got the privacy, the ability to hide your transactions from anybody and everybody, and only disclose rational privacy, disclose to who you need to when you want to, whether that's the authorities for tax purposes, your accountant for bookkeeping, or just your customers for how their money's being spent. That's what Midnight is really bringing. So it's exciting. It's very, very positive.
Fantastic.
You're dead right, Pierre.
From the point of view of if you're looking at as a financial investment, okay, so we got two things that for me are really interesting at the moment. Is that one of it is the huge interest in privacy coins. If you see some of the biggest success stories, lately have been kind of Zcash and Monero, which are privacy coins. But now, within Midnight, you got the same features, but in a much stronger blockchain. You got Cardano built on academic research and with a strength that you can't find anywhere else. And two, now kind of the Pentad, as you can say, so including has come out saying that what they will do, they will support the top 15, 20 apps in the Cardano environment to make them ready for Midnight, for the Bitcoin DeFi, and to get them listed on main exchanges. So we finally, I know there's now a couple of things that are quoted on exchanges now. Cardano, apart from Midnight, they are quoted on main exchanges, but soon, within the next 6 months, we might have 15, 20 plus, Cardano ecosystem tokens that will be listed on Binance, on Kraken, on all the main exchanges. That again would be huge, apart from the extra attention, but also from the attention from the Bitcoin world that can then use something that is well built, well supported, with good volume, that then can come in and start using for their DeFi. So I can see there's like two vectors that will really push forward both Midnight and Cardano to the next level.
Yeah, and you pair that with the only thing that's really missing from the Cardano ecosystem, which is a large volume stablecoin. And the Midnight team, the Pentad, are talking about making sure that we've got one of the top tier stablecoins operating in the Midnight space, whether that's Circle or Tether. You'll have a high volume stablecoin available, as well as their own shielded. If you haven't heard about it yet, shielded USD, which is going to be a stablecoin on Midnight that has all the benefits of that obfuscation and rational privacy, but actually be a stablecoin that we can rely on, called native, and that will be the sort of in between all the blockchain token. So whether you're bringing your money in from Bitcoin as a real crypto, or from Tether as a fiat backed stablecoin, you'll be able to interoperate through native stablecoins to the blockchains you're operating in, and shielded hopefully will be that middle ground, which is something I'm very excited about as well.
Exciting, lots to be interested in. So if you've never been into crypto before, now is the right time to get yourself to understand what's going on, because it could be this 2026 could be the year where really we starts to go mass markets, and so it could be the start of finding crypto in lots and lots of different things that we do already in the States. You can pay with crypto in many restaurants and many shops, at the point of sale. Simply the machines that that retailers use at the point of sale, you can choose to pay card, cash, or crypto. And it become more and more. So it's available on Stripe now, even from these shows, and on different payment rails they're more used in the US than the rest of the world, but they're still available to hundreds of millions of people. So this will become more second nature, the same as using a credit card is. All right, guys, I'll need to go over to another call coming straight away after this. Jonathan, are you running the Cardano session?
Cardano Q&A coming up after this.
Fantastic. So for those of you that actually don't know, Jonathan is a Cardano stake pool operator, and he runs a session that starts pretty much after this one finishes every week. So if you are interested in knowing more about crypto in particular, not just in general like I do during these sessions, but if you want to know what happens actually on a blockchain, so I would encourage you to go and see some of these sessions. The link has just been posted in the chat box. So if you even if you can't do it today, but you want to do it in the future, save the link, because it's really interesting to know what happens in a blockchain ecosystem. Okay.
Thank you, Luca.
No problem. You're welcome, and I'll talk to you later anyway.
Yeah.
Okay. So have a fantastic weekend, everyone, and we'll see you again next week, same place, same time. Don't do anything I wouldn't do. Okay. Bye, everyone.